Okay. We almost there. We almost to the finish line, guys. We signed up for credit monitoring. We done updated the personal information. We added the revolving credit. Now it's time to add installment credit. Yep, installment is just like what it sounds like. You're paying a loan in installments. So examples of the installment accounts is going to be your home loan, your mortgage, right? You pay that mortgage for, let's just say 30 years. That's your term. And your installment, your payments may be $1,500 a month. That's your installment amount. And so that's going to include whatever finance or interest charges is in there. But that's strong lines of credit that makes up a large portion of your overall credit score. So if we only have revolving credit on our profile and we don't have any installment credit on our profile, well, the bank still will look at us like we're not solid, because first of all, we're going to be missing points on our credit report. But the credit report is still considered like a thin file, is not strong, because when it comes to installment accounts, when it comes to the profile period, the banks are looking for what installment accounts has he or she had and paid off, such as, let's just say, a car you paid off, a loan that you paid off, a house that you paid off. That shows excellent payment history. So that installment section, of course, and the revolving section is tied closely. It is your payment history, you know? So in order to have great payment history, you have to make payments. You want to always keep an installment account or 2 or 3 open at all times to kind of show that you have open credit that you're actually actively paying on. And then you want to have some credit that you have paid off, right? So again, you know, the same way we did with the credit on the revolving side, we can do on the installment side. So same way I instructed you guys to go sign up for a secure credit card with your own money, well, I'm going to advise you to do the same thing on the other end, which is the installment side, as a loan. So one of my favorite installment loans to add to the credit report is going to be Self. I've been using Self since pretty much they first came out, and they were promoting themselves as Self Lender. But now I hear them say just Self. And what I love about Self, it's a secure loan in a sense, but it doesn't work like a traditional secure loan, because the old school traditional secure loans, right? If you wanted $1,000 secure loan, you had to have $1,000 in cash or in your bank account or whatever. Take it to the bank. They basically put it in a CD, and then you basically borrow from that CD and pay in on that loan until it was over, and then you basically get to crack the piggy bank and get your money back. So Self Lender works basically that same way, but instead of coming up with that $1,000, you don't come up with that $1,000. So if you have, let's just say for simple math, if you had a $1,000 loan with Self, you would literally just start off paying into it. So if that was $50 a month for 2 years or $100 a month for 1 year, whatever it is, you're going to pay that monthly, you know, plus whatever interest or finance charges they have attached to it, which is relatively small, honestly. So you pay that for whatever the term is, which is the length or how many months or years or whatever. So you're going to pay that. Let's just say you sign up for a 1-year program with them. You're going to pay that note for 1 year. And then after that 1 year, they're going to basically crack the piggy bank, give you your money back, minus whatever, you know, fees that they charged or took from you. They're going to give you your check back. Now, what I like to do after I get the check back is immediately start another Self Lender. That's just a part of my process that I've been doing for years on myself, different coaching clients that I've worked with to help them build up their credit profiles to go get business loans or, you know, houses or real estate, whatever they were trying to do. The goal usually starts and ends with credit. So I always want my students and my clients to have excellent credit. And so, again, the Self Lender was always a part of it as far as I can remember, you know, it being out. Now, before that, we were doing mostly all secured loans inside of major banks. And we still do that when it comes to building, stronger profiles. If the client have a bigger budget, trying to do something bigger, faster, or we're trying to build up some business credit. But just starting off with what we're doing, I love Self-Lender. I suggest you sign up with them. And not only Self-Lender, there's a couple other banks that I like. I'll put them in the description that you can sign up that has similar term and they work in a similar fashion. And again, we want as many positive lines of credit on the credit report as possible. So don't think if you add 3 or 4 loans to your credit profile that you look crazy or anything like that. If you build up a new file, don't worry. We need to add these accounts so that we can get that profile thick, strong, heavy. We want that profile to look like a rap sheet. We want it long, like a big time criminals rap sheet. You know what I'm saying? We want it pages and pages long, not just a simple 1-page credit report, if that makes any sense, if you can correlate together. You know what I mean? Like, I don't want you to just have a credit report with just, 1 revolving account and 1 installment account, and that's it. I want, maybe 8 to 10 to 20 accounts over time on your credit profile so we can really beef it up. And when we go ask for cars and we go ask for loans and we go ask for houses, the bank feels very, very comfortable giving us the money, opening the doors to the vault or the safe, because they know we pay our bills on time and we have paid multiple lenders their money on time. So now we got a good track record. So not only do we have a good track record with the people that we are doing business with, it makes other people, other banks, other lending institutions want to do business with us. So let's go ahead and add that installment loan, maybe more than 1, maybe more than 2 or 3. You know what I'm saying? It's all about your budget. But remember, this money is coming back to you, essentially. This money is coming out of your pocket and basically going into your credit and back into your pocket again to keep building. You're investing. It takes money to make money. But when you get that credit score and that profile right, man, the sky is the limit. So let's go ahead and add those installment accounts, and I'll be back to you for the next step.